All right, let's do a couple of questions to emphasize what we just learned. Question number 4. Last sentence first. Lino's net income was $150. What amount should Lino include as a net cash provided by operating activities? All right, so they're asking for net cash provided by operating activities. Now, here's a question for you. If you want to do the direct method, what do you need to have? You need to have an income statement to convert accrual to cash, accrual to cash, accrual to cash, accrual to cash. If they give you just this, the net income number, you have to do the indirect method because you don't have the income statement. But if you have an income statement, you could do either direct or indirect. If you have just net income, you're pretty much going to do the indirect method. So let's read this. It says net income was $150. What is cash provided by operating? So what do we already know about this? We know that cash provided by operating, we know that the net change is going to be positive because they told us cash provided by operating. All right, so it's provided, which is positive. Remember, provided is positive versus used is negative. Okay, so it says, Lino Company's worksheet for the preparation of its X3 statement of cash flows includes the following. Accounts receivable. All right, 2923. Did it go up or down? Up or down? Let's see, 2923. A lot of people go, oh, went from 29 to 23 and went down by 6. Okay? Guess what? Hello, you need some help. Why? What are the dates? What comes first, December or January? January and then December. Remember, it's December. Holiday, holiday, la 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 la. Right? That's the end of the year. So if we went from 23 to 28, what happened to accounts receivable during the year? It changed by 6 and went from 23 to 29. As far as I know, December's after January. It must have gone up by 6,000. Oh, darn. So on the exam, don't assume it's always beginning end. It could be end beginning. In this case, it's end beginning. So again, look at dates. Don't just go, oh, beginning, the first column must be the... No. Read the dates. So here, receivables went up. Okay, if accounts receivable went up, what does that mean theoretically? Well, let's go back to my example here. Accounts receivable went up by what? 6. So if sales were 100, then what? Cash must be 94. This must be less. So that means that if I'm starting with my net income of 150, then this adjustment would do what? If receivables goes up, that's money I didn't collect, back out $6,000. And that's because of the increase in AR, right? Receivables went up, back it out. Receivables went up, back it out. Okay, next item. It says allowance for uncollectible accounts went from 800 to 200. So your allowance went up. Allowance for doubtful accounts went up by 200. So if my allowance goes up, that means that I have a bad debt expense of $200. Now, that means that if this number is 150, right, because that's the number they gave me, net income, if I have an expense in here of $200, that means this is low because it wasn't a cash outflow. It was debit, bad debt, expense, credit, allowance. So I have $200 more in my pocket than I think I do. Add back the $200. That is the increase in allowance for bad debts. Next thing, prepaid rent expense. Prepaid rent went down. Prepaid rent went down. Now, what does that mean? That means your prepaid rent, went down. Now, let's think about it. How do you set up prepaid rent? You debit prepaid rent, which is an asset, and you credit cash. So that's when cash would have gone out. Now, prepaid rent goes down because now you're expensing it and crediting prepaid rent. So now you're using it up. By how much? We used it up by $4,200 because that was the change. So prepaid rent went down. That means that prepaid rent would have been an expense on my income statement. So on my income statement, as part of the 150, I'll have a rent expense. But what happened? The expense wasn't paid this year, it was paid last year. So last year I paid the expense, but I didn't expense it. I debited prepaid, an asset. Now I'm amortizing out the asset and expensing it. So it's an expense here, but it was not a cash outflow this year. I still have the money in my pocket. Add back $4,200. So plus $4,200 prepaid rent. And that was a decrease in prepaid rent because the asset went down. Next item. Accounts payable went from 19.4 to 22.4, which means it changed by $3,000. So accounts payable went up. Now let's think about it. If accounts payable goes up, that means part of cost of goods sold wasn't paid for, which means I still have that money in my pocket, so add back the $3,000. Increase in AP. So, what does this say? It says I got 150, receivables went up, that's money I didn't get. Bad debt expense went up, but that's money I didn't spend, so add it back. Prepaid rent went down, which means I expensed it, but it was an expense. Reduced this number, but it was an expense from last year, not this year. Payables went up, which means part of cost of goods sold used to calculate this number was not paid for, even though I expensed it as if it wasn't paid for, I still have the money, add it back. What does that give me? 150.14. And that is answer A. Wow, okay.